people say I won't sell, or when should I sell? Bitcoin is a savings technology.
Yeah.
It's a savings account. It protects your wealth from the ravages of the stealth wealth tax of inflation. So when do you cash out your savings? Not every day. You don't cash out your savings to buy coffee. You don't cash out your savings to buy a shirt. You cash out your savings when you need to make a big investment, or you need to make a big purchase like college, or you want to fund a year's worth of retirement. And so the way Bitcoin is going to function is people are going to move their savings into Bitcoin.
Yeah.
It will continue to appreciate.
We are only a few months into what many predict will be the biggest cryptocurrency bull market in history. This presents another grand opportunity for investors to make a lot of money on their investments and further free themselves from the rapidly collapsing monetary system. For some cryptocurrency investors, a wise strategy is to try to time the markets so you exit when prices are at the very top, before the painful drawdowns of the bull markets. However, Mark Yusko, the founder, CIO, and managing director of Morgan Creek Capital Investments, cautions against trying to time the markets, especially if you're selling your assets for frivolous reasons. During a recent interview with the Dales Report, Yusko explains the importance of holding on for as long as possible to your crypto investments, especially Bitcoin, which he says will be the foundation of the next global monetary system. Yusko is certain that the leading cryptocurrency will always keep appreciating, not necessarily because it's increasing in value, but because of the rapid devaluation of all fiat currencies. He uses the example of weaker currencies like the Turkish lira and the Argentina pesos, which have been dramatically devalued in the past year. When measured in the Turkish lira, for instance, Bitcoin has gone up by over 400% in the past year, and over 1,145% when measured in Argentina pesos. During the conversation, Yusko also talks about the mad scramble for Bitcoin through the spot Bitcoin ETFs. Like all other experts with decades of experience working with institutional investors, Yusko also believes this is just the beginning of the flood of investments that have been unleashed on Bitcoin and the entire cryptocurrency industry by BlackRock and other issuers. Overall, Yusko is ultra bullish and has very high expectations for Bitcoin and other top cryptocurrencies in the bull market. We will now bring you clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
These are spot ETFs, meaning when BlackRock gets an order, or when Bitwise gets an order, Fidelity gets an order, they have to go find actual Bitcoin.
Yes.
They can't just buy futures contracts and pretend that they have Bitcoin. So what you're seeing in the last week is a mad scramble.
Yes.
Literally a mad scramble for Bitcoin, because in the first few days, actually first few weeks, every dollar that was coming in that BlackRock and Bitwise and Fidelity and Valkyrie had to buy, GBTC was selling. Because they decided to keep their fee really high, because this was actually reasonably smart. I don't like it, but it was reasonably smart. They're like, look, the vast majority of our investors in GBTC, the trust, bought in at much, much lower prices. Every day, 200 million, 400 million, 500 million was coming out, and that was available to buy with the new inflows. Well, suddenly no one was selling GBTC, and they still had to come up with, on some days, 10,000 Bitcoin. There's only 900 created every day. So you had this massive supply demand imbalance. And the rumor was yesterday or the day before that the OTC desks basically
were dry.
They just didn't have any Bitcoin to sell. I was on Kraken the other day, and I was swapping an old, I won't use the vernacular, but an old token that I thought was decent, and it turned out not to be, trying to swap it into Bitcoin. And it just kept saying, not available, not available. Now, it doesn't mean that they don't have any, but at the price, see, that's the thing. It's not that there's no Bitcoin. there's lots of Bitcoin. There's call it 15 odd million. There have been 19 something million created, and there's somewhere between 3 and 5 million that have been lost or stolen. So there's 15 or 16 million Bitcoin. So there's plenty of Bitcoin. The problem is there's a whole bunch of them, 65 odd percent, that people have said, at this price, I'm not selling it. This is the thing that people are going to have a hard time wrapping their head around. And it's actually why my Twitter handle has hashtag 2.1 quadrillion, because that's how many Satoshis exist in the world. So there are 100 million Satoshis per Bitcoin. So there's 2.1 quadrillion, which is 12 zeros. That's a lot of zeros. Okay. Now, a Bitcoin at $1 million or $2 million or $5 million, I mean, literally, it's going to make people's head explode. They're not going to be able to I can't afford that. Well, you don't have to buy a Bitcoin. You can buy one Satoshi, one 100 millionth
of a Bitcoin.
Of a Bitcoin, or you can buy 10 Satoshis or 100 Satoshis or 1,000. So what I think needs to happen is at some point we need to flick a switch and we need to start talking about Satoshis. And there was some writings in these emails that came out, from Satoshi Nakamoto himself that said the reason he picked the 21 million number is it kind of worked out to be global currency with a Satoshi equal to $1. That kind of works. And ultimately, I think today a Satoshi is like, 0.7 cents or something. I should be able to do that math, but I can't do it in my head. But over time, the idea that this thing is divisible to 100 million units is going to catch on and people are going to understand.
Metcalfe's law posits that a network's value is proportional to the square of its number of users. When applied to Bitcoin, this suggests that the value of Bitcoin will rise as more people join the network. The network's utility and value will rise exponentially with every new user, but that exponentiality might be too huge for many people to fully comprehend. A popular example that attempts to capture the importance of exponential growth is the ancient story about an Indian king granting the inventor of chess the reward of the amount of rice obtained by placing a single grain on the first square of the board and then doubling the amount on every subsequent square. It looks pretty basic at the beginning, and at the 10th square, the inventor still has less than 15 grams of rice, but by the 20th square, the reward is up to 15 kilograms of rice and a massive 15 tons at the 30th square. Another example is dropping 1 milliliter of water into a football stadium and doubling the number of drops once every minute. At the 40th minute, the stadium has only a bit of water, barely enough to cover the surface. However, it's completely filled to the brim just 4 minutes later. This is how Yusko imagines the growth of the Bitcoin network in the coming years and decades, beginning, of course, with the influx of institutional investors coming in through the Bitcoin ETFs. Let's get back to Yusko's interview.
The fact is, linear math isn't that bad. Exponential math is really hard for the brain to grasp. If I took 20 linear steps, right? 20 steps, I would be at the other side of my office.
Yep.
If I take 20 exponential steps, I go around the world twice. And people say that's bullshit. Like, just do the math. Do 2 to the 20th power and you get a big number. If you look at its curve, it is exponential, right? And that point, it's exponential in two ways. One, it makes these big parabolas and then it crashes, and it makes another parabola. But what it also does, it makes a parabolic Metcalfe's law curve, meaning going from $1 to $10 is a massive move percentage-wise, right?
Yes.
10 times. Going from 10 to 20, that's another 10, but it's not that big a move.
Yeah.
So the law of large numbers starts to catch up. But here's the rub. Your point on how much money is coming in is really, really important. I believe this year, more fiat will be converted into Bitcoin, actual transaction, not paper, but actual transaction, than the history of Bitcoin. In the first 15 years, and I haven't done the math exactly and counted, but I think it's right around 300 billion. I think it's a little bit less than that. That's on $1.2 trillion of market cap. So we have 1.2 trillion. We're like, well, but if it's 1.2 trillion, didn't 1.2 trillion come in? No, that's not the way it works, right? Because if I'm trying to put $1 in and you have $1 worth of Bitcoin, you may say, you know what? I'm not selling it for $1. I'll sell it for $1.20. I'll sell it for $1.30. I'll sell it for $1.40. And so what happens is the people that came in early, right? They had to put a very small amount of money to get a huge amount of Bitcoin. In fact, some of them didn't have to put in any money because they mined it. And so as that then matures and people put new money in, then the amount of capital that converted to Bitcoin is a certain number. But then if you and I trade that same thing, we're not putting any new money in, right? So it's called a multiplier. And so some people have estimated that the multiplier is like 100. I don't think it's that high. So like if $1 comes in, the price goes up $100.
Yeah.
I don't think it's that high. I actually think it's a meaningful number. And so if you look at the last time we went from 10,000 to 60,000 back in 2020, only 10 billion came in. Think about that. The price quintupled, or sextupled actually, and we only brought in 10 billion into GBTC. This time we've already had more than 10 billion come in, and we went from 40 to 68. But why didn't we go up the same amount? Again, law of large numbers. But here's your point. How much is going to come in? I think this year, 300 billion, which again is more than all the money that's been converted in the past, comes in. Well, where's that 300 billion number come from? Not just out of the sky. There's 30 trillion with a T. And that's, remember, 1 trillion is $1 every second for 31,710 years. That's a lot. 30 trillion owned by us, boomers, controlled by our advisors, the UBS, the Merrill Lynch, the Vanguard, whatever.
Okay.
If those advisors say 1%, that's 300 billion.
Wow.
So it's not 10%, it's not 50%, 1%, which is a reasonably logical number. 2% is better, 3% is better, but 1 is logical. If 1% comes in, that's 300 billion. And that 300 billion, I think, will move the price materially more than 300 billion.
Mark Yusko has been talking about $300 billion getting into Bitcoin and crypto since last year, before the spot Bitcoin ETFs were approved, and the numbers have been pouring in since they were approved. According to recent data from BitMEX, BlackRock has brought in over $10 billion into its spot Bitcoin ETF since the IBIT launched in early January. On March 11th, the world's largest asset management firm recorded a massive $500 million in inflows, the second highest daily record after the February 28th record of $673 million. Yet, this is all clearly just starting, and there's still so much more to come. Please share your thoughts on the video in the comments section. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.